hello everyone. Welcome to today's webinar. On behalf of the National Transit Institute, I welcome you and thank you for participating. The National Transit Institute develops, promotes, and delivers training and education programs for the public transit industry in the United States. Today's webinar is based on NTD Annual Reduced Reporting in the Urban module. We are pleased to have as our presenters today Melissa Conti and Darlene Smith. Melissa Conti joined the NTD team in 2015. She is a graduate of James Madison University and currently works as a senior validation analyst across urban and rural reporting modules of the National Transit Database. Darlene Smith joined the NTD team in 2018. She is a graduate of Southern Virginia University and currently works as a validation analyst for the urban reporting module of the National Transit Database. Today's presentation will consist of the material with a pause for question and answers at the end, although you can type your questions in the Q&A box throughout the webinar, and if possible, someone will type an answer to you. Any unanswered questions will be moderated out loud at the end. If you do not see the Q&A box, you can enable it by making your menu bar appear. It might be at the top or the bottom, depending on your setup, and clicking on the Q&A box toggles that on and off on the Zoom controls. So if, just click that. Sorry. If you already have a copy of the presentation, handouts that were emailed to you, great. If not, I did paste the link in the chat box. If the chat box starts getting scrolly or somebody needs it again, let me know and I will repaste it. And I guess that covers everything. And I'm now going to turn the presentation over to Melissa and Darlene.
Good afternoon, everyone, and welcome to the National Transit Database webinar for Reduced Reporters. Thank you very much for joining us today, and thank you to Lori for the intro. Like Lori said, we will answer questions at the end, but if we have any quick questions we can answer in the chat pod, we will do so during the presentation. Here is the contact information for the National Transit Database. If at any point you require technical assistance while completing your report or accessing our published data products, please feel free to call or email our help desk line between 8 a.m. and 7 p.m. Eastern Time. My name is Melissa Conti, and I'm joined here today by Darlene Smith, who will also be presenting. Our contact information is listed here if you have any questions about this presentation, or you can also contact your assigned analyst. If you're unsure who your analyst is, you can also ask us and we can find that out for you. Here's the agenda for this afternoon. We will review the basic policies of NTD reporting, including a reporting overview, as well as touching on some policy clarifications and new requirements for this year. We will then discuss how to get started in the NTD 2.0 reporting system, how to kick off and complete the annual report, how to submit the report through the system, and we will also briefly review the validation and revision process. We will first begin with an overview of the NTD, or National Transit Database. Who reports to the NTD? Agencies that are recipients or beneficiaries of FTA 5307 Urbanized Area Formula Program Funds or FTA 5311 Rural Area Formula Program Funds are required to report to the NTD. In 2018, with the implementation of the new TAM rule, or Transit Asset Management Rule, any recipients of FTA Chapter 53 funds are required to report to the NTD if they operate public transit. These agencies are public transportation providers that may include direct transit providers, state departments of transportation and their subrecipients, as well as metropolitan planning organizations, or MPOs. Transit agencies are welcome to report their public transit data to the NTD on a voluntary basis, even if they do not currently receive these funds. The data from these reports contributes to apportionments for their urbanized areas, or USOAs. Within the urban module of the NTD, reduced reporters are transit agencies who operate 30 or fewer vehicles in their peak maximum service. They also do not operate on any fixed guideway, such as rail or fixed catenary systems. For those who report as a reduced reporter, These agencies do not report data related to passenger miles in their service. They also do not report monthly service statistics or monthly safety data. Agencies have 4 months after their fiscal year ends to complete their NTD report. For example, if your fiscal year ends on June 30th, the deadline for submission is October 31st, and the report must be closed out or finalized by March 15th of the following year. We have 3 primary groups of fiscal year reporting deadlines listed here in the table. Next, we will cover what to report. Agencies must report all public transportation services, whether they are operated by your agency directly or contracted out as purchased transportation. Public transit must be regular, continuing, shared ride, and open to the public or a segment of the public, such as seniors or persons with disabilities. Report all assets, expenditures, and service data associated with these services. In your financial data, you should report the total annual cost of your service, regardless of whether it was federally or locally funded, and you should only report services for which your agency is responsible for covering the full cost. You must report data that is specific to each mode and type of service you operate, such as bus, demand response, van pool, and so on. Be sure to collect and report service and financial data by each separate mode. Additionally, ensure you report actual data rather than data that is based on calculations or estimates. Report all direct as well as indirect expenses related to the service, also regardless of funding source. Here is a general flow of the NTD reporting process. All agencies begin with reporting training and familiarizing themselves with the NTD policy manual. They then compile and collect their data once their fiscal year ends. They enter it into the NTD system and submit their first report. Then their assigned analyst will review the data and send it back with revisions or requested clarifications. Once the report is finalized, it is sent to FTA for approval. The data is used in the apportionment formula funding in the following year, and the data is eventually published on the NTD website for the general public to use. Next, we will discuss the changes and clarifications for the 2019 report year. The first clarification is for the reporting eligibility for commuter service. FTA has clarified that service is considered commuter service if at least 50% of the passengers make a return trip on the same day across all service runs for 1 year. Agencies reporting any new commuter modes with one-way trips that exceed 90 minutes must submit a survey to the NTD to show that their service meets these criteria. Next, we have a clarification on the reporting eligibility for temporary bus bridge service. If one reported mode provides a substitute service for another reported mode, agencies must report the financial and service data under the mode that is providing the service. When a temporary bus bridge uses a new mode or type of service, the agency is not required to add it to their report. However, they may add it if they so choose. If the new mode is added to the report, the agency must adhere to all NTD requirements set forth in the policy manual. The next clarification is for the reporting eligibility for evacuation and disaster service. FTA has clarified that services provided in direct response to a natural disaster or part of an evacuation effort are not considered public transit. These services are not regular and continuing and therefore do not meet the definition for public transit. Financial and service data for these services should not be included in NTD reporting. Lastly, for eligibility clarifications, we will cover services provided by transportation network companies. Agencies reporting to the NTD and contracting with the Transportation Network Company, or TNC, for on-demand shared mobility service must include the data for this service in their NTD report if it is public transit. The contract between the agency and the TNC must meet NTD criteria for purchased transportation, and the service must be regular and continuing and shared ride. For reportable examples, please refer to the appendix in the NTD policy manual. If you have any cases of this, please discuss them with your analyst directly. On the D10 CEO certification form, agencies must now indicate if they use data collected with automatic passenger counters or APCs. If APCs are used, agencies must indicate which method they use to collect the data. There is a new method listed on the D10 form that is shown on the next slide. Here you will select the checkbox if APC data was used and then review options A through E and select the appropriate method. Please note that agencies using APC data to report data to the NTD must submit an APC certification application for review. Next, we will cover changes and clarifications related to the asset module. FTA has clarified that passenger stations no longer have to be an enclosed structure to meet station criteria. Anything that is a significant structure are now considered to meet station criteria. Please review the updated station criteria in the NTD policy manual and update your A10 form and A15 form accordingly. Also related to the A15 form, all passenger stations must be inventoried regardless of capital responsibility if they are used in revenue service. This includes passenger parking facilities and passenger stations. Passenger or parking facilities include things such as parking structures as well as parking lots. To better reflect passenger stations for all modes, FTA has added a new facility type for ferryboat modes. On the A15 form, ferryboat terminal is now an option for agencies that service ferryboat docks or terminals. Please be sure to update your facilities inventory appropriately if this applies to you. On the A15 form, administrative and maintenance facilities must be inventoried only if the agency has capital responsibility for the facility and the transit use is greater than incidental. FTA has clarified that the threshold for incidental use is 50% or less of the facility's physical space, or in the case of maintenance facilities, agencies may use the number of transit vehicles serviced at the facility compared to the number of total vehicles serviced to determine if the use is incidental. For example, if a city has a public works maintenance facility that services 5 transit vehicles as well as 100 other vehicles for the city, the agency can do simple math to determine that this facility is incidentally used for transit and therefore does not need to be reported. For condition assessments from the A15 form, agencies are not required to report assessments for facilities that are under construction. The condition assessment should be reported once the construction is complete. For any facilities that are still being used in revenue service while also under construction, these should still be inventoried on the A15 form, but the assessment can be reported once the construction is complete. On the A30 form, FTA has introduced a new field for all vehicle fleets to collect information on autonomous vehicles. For existing fleets and any new fleets, please identify any autonomous vehicles by selecting the checkbox. For this purpose, FTA has defined an autonomous vehicle as one that is capable of performing all driving functions without human input under certain conditions. Here, you can see the checkbox that you would select if the vehicles in a particular fleet were autonomous vehicles. Also on the A30 form, FTA has revised the options for the type of last renewal field. Mid-life powertrain overhaul has been removed as an option, and the remaining options are mid-life vehicle overhaul and life extending rebuild. For any vehicle fleets that have undergone a renewal, please select the appropriate type on the form. For the service vehicle inventory, or A35 form, FTA has clarified that agencies should report a representative sample fleet of vehicles if they are using service vehicles that are pulled from a pool of non-dedicated agency-owned fleets. These are cases where the service vehicles are not specific or assigned to transit, but may be used as needed to support the transit service. The reporting of a representative sample fleet is similar to the reporting of non-dedicated revenue fleets, on the A30 Revenue Vehicle Inventory form. For the estimated cost field on the A35, FTA has clarified that the intent of this field is to capture the cost of a comparable fleet. It should represent a reasonable estimate to replace the current asset type, allowing for moderate increases in cost due to inflation or improvements in technology. It should not represent planning costs or significant changes in asset type. If no recent cost estimate has been developed, agencies should report the original cost of the asset. Lastly, for the A35, FTA has clarified the definition of service vehicles. Service vehicles are reportable if they are self-propelled and either roadworthy or major pieces of construction equipment. Next, we will take a look at the Transit Asset Management Phase-In schedule. For report year 2019, you can see here that you are required to report your FY 2020 targets, report condition data on vehicles, including revenue and service vehicles, and you are also required to report condition assessments for 50% of your facilities for which you have capital responsibility. The narrative report for your TAM plan is also required for report year 2019. If your agency has a Transit Asset Management Plan or TAM plan, your narrative report is a required document for the 2019 report. You can upload this document to the A90 Performance Measure Targets form. This document may include any changes in transit system conditions that may affect progress towards your targets set in your TAM plan. For further guidance on the TAM narrative report, please refer to the TAM website. The next item we will discuss is the Independent Auditor Statement for Financial Data, also known as the IASFD. This audit is a review of the agency's accounting system to determine whether or not the agency can meet NTD financial reporting requirements. This was a requirement in RY 2018 for agencies that did not have an IASFD within the last 10 years. But if your agency received a waiver last year in report year 2018, the IASFD documentation is due for report year 2019 at the time of the original submission. There were a couple of changes to the RR20 or reduced reporting form back in report year 2018. And as a reminder, we will review them. Number one, you will report on fare revenues by the specific type, passenger paid fares or organizational paid fares, but you will also still report a total amount of fare revenues expended. Number two, the donations line item has been removed from the form. And lastly, number three, the contract revenue line item has also been removed from the form. Now we will review some key points to remember. NTD follows accrual accounting principles. What that means is that revenues are recorded when earned, regardless of whether or not the receipt of the revenue takes place in the same reporting period. Expenses are recorded when the liability occurs, rather than when the payment is made. For example, if a passenger purchases $10 worth of fares, but only uses $5 of fares at that moment, the agency would recognize and report $5 of passenger fares, as that is the portion earned at the fiscal year end. Following the accrual accounting path, total expenses will be broken down between two types, operating and capital. Operating expenses are day-to-day expenses related to operating and maintaining vehicles, equipment, and buildings, along with any general administration costs. Some examples of these operating costs are fuel for the vehicles and salaries, wages, or benefits for transit-related employees, along with the rest of the examples listed here on the slide. For agencies with multiple modes, some expenses are hard to trace back to a specific mode. So if an agency operates more than one mode, the total amount of operating expenses must be reported as indirect and direct by mode. Direct expenses need to be reported to a particular mode. These can include things like bus passes, labor, or fuel costs. And indirect expenses like maintenance costs for shared vehicles or building maintenance expenses, need to be determined aside from direct expenses. Once indirect expenses have been identified, they can then be allocated between the modes involved based on a reliable service data point like vehicle revenue miles. Capital expenses are related to the purchase of transit equipment like vehicles or maintenance facilities. This means non-expendable personal property that has a useful life of over 1 year, or an acquisition cost of over $5,000, or the capitalization level established by your organization. If you have a capital expense where both modes utilize that asset, please report the capital expense to the mode that the asset supports the majority of the time. Here are some key NTD reference documents, including our glossary, user guide for the reporting system, and the updated uniform system of accounts. You can find these on our website or linked directly here in the presentation. We have new reference materials, including a reduced reporting policy manual, which is specifically for reduced reporters. Please note we have also compiled a frequently asked questions page, which you can find on our homepage. If you have any suggestions for the FAQ page, please feel free to reach out to your analyst. Now we will cover the NTD 2.0 reporting system. This is the NTD homepage for those of you who aren't familiar. It's transit.dot.gov/NTD. There are 2 links on this page that will allow you to access the reporting system, one on the left and one on the middle right of the page. Once you log in, you will land on the news feed. You will see updates and notifications from the NTD team here. While the system does include a means to enter comments or provide kudos to your analyst, please do not use this platform as a means to contact your analyst with reporting questions. Please always email them or give them a call. You can access your annual report, agency profile, and your system users through the Records tab at the top of the page. The agency profile section is a frequently accessed part of the NTD system. This houses data that typically doesn't change from year to year, such as your basic information, the modes you operate, the users who need access to the report, and historical reports. You can access the profile by hitting the Records tab at the top of the page, then My NTD Reporter Profiles. Next, you'll select your agency's profile link. You will then land on the profile summary page. This page contains your analyst's name, phone number, and email address, as well as your agency's basic information. At the top of the profile section, the e-file library contains historical requests like extension requests or agency fiscal year updates. The form library contains your agency's reports from previous years. If you need to access the 2018 report for reference while completing the 2019 report, do this through the form library. Related actions allow you to edit your agency's profile information like basic information, modes, or users. To edit your modes, select Related Actions and then select View and Manage Reporter Modes link for the P20 form. If you'd like to add a new mode to your agency's profile, select Add Mode at the bottom of the screen. You will not need to add the same mode year over year, as this data will be retained in the NTD system. Select the mode from a drop-down menu, such as bus, demand response, etc. Select whether the service is directly operated by your agency or contracted out as purchased transportation. Enter the commitment date, which is when your agency first committed capital funds towards the mode, and enter the start date, which is the first day of revenue service. Do not enter an end date if the service is still in operation. Only enter an end date if the service has been terminated. Please note that agencies cannot delete modes from the profile once they have been added. You may edit the modes directly in this form by selecting the field you wish to update. You may add an end date if the service has ceased operations, or update the commitment or start dates if needed. Lastly, we will review the user roles for agency users in NTD. The user roles are as follows: CEO, NTD contact, editor, viewer, and CEO delegate if applicable. The CEO delegate role is optional for all agencies and requires FTA approval. CEOs and CEO delegates have the highest level of access and permissions in the system, including the ability to create reporter requests like waiver or extension requests. CEOs have the ability to submit the report as well as view and edit report forms and issues. NTD contacts have the same permissions as CEOs aside from creating reporter requests and submitting the original submission or the first draft of the report. Editors may only revise and save forms, while viewers may only view forms. You may disregard the safety roles like safety contact or safety editors, as urban reduced reporters do not report safety data through this monthly safety module. Beginning in calendar year 2019, reporters will have to certify all of their users when they begin the report. All user managers must do this. This is consistent among all FTA FACES applications, such as TRAMS and ECHO. Please consult the FACES user guide on FTA's program website for more information. Next, we will jump into starting the report year. The first step in completing the annual report is completing the report year kickoff. This process officially launches the current report year after your fiscal year ends. After your fiscal year ends, your agency CEO and NTD contact will receive a task in the system to complete the kickoff. This process will generate the report package for the year after you confirm your agency's information. First, the CEO or NTD contact will select the Task tab. You will complete the 2020 report year kickoff in order to generate the 2019 report package forms. You'll need to accept the task and then click Proceed. The first step in this process is confirming and editing your agency's users for the year. You can add users or edit existing contact information as needed. The next step is confirming or editing your agency's mode for the year. You can add new modes if you started a new service, or end modes if a service has ceased operations in the past year. Please do not update this section to reflect your fiscal year. This is a common reporting mistake. The next step is managing your 2019 Transit Asset Management Group Plan sponsor. If you are participating in a group transit asset management plan, you will confirm your sponsor from 2018 here. If you are completing your own transit asset management plan or TAM plan, you can simply click Continue. If you need to remove the sponsor from last year or select a new one, please contact your analyst. Next, you'll confirm your reporter type for 2019. If you were a small systems reporter last year, ensure that No is selected under Change Type, as your reporter type will not be changing. Select the same answer for your 2020 reporter type, then select Submit to complete the report year kickoff. This will generate your 2019 report package forms. The system typically takes a couple of minutes to complete this function, so be sure to check your forms after allowing a little bit of time. Next, we will review the annual form navigation in the reporting system. To access your 2019 report package, first select Records at the top of the page, then NTD Report Packages. Select the 2019 report package link. Once the report package summary page opens, select Annual Forms at the top right-hand corner. This will open the list of report package forms. You can select any form link to open it. This is the list of forms you will see in your report package, which we will now review one by one.
The first form in each report package is the B10 identification form. The first step on this form is to select your agency's organization type from the drop-down menu. Examples of available organization types include city, county, or local government unit, or independent public agency or authority of transit service. After you have selected your agency's organization type, you will report your demographic information. This includes service area square miles and service area population. The data points for service area should represent your agency's true service area for transit and not the data for your particular urbanized area. To complete your demographic information, you will report data related to your urbanized areas or UZAs. Your primary UZA will be pre-populated in the form. You can add secondary urbanized areas as applicable by clicking the Add UZA button. If your agency has any modes that will be captured in another NTD report, you will report them in the Modes Filing Separately section. If this does not apply to your agency, please leave this section blank. Please consult your analyst before adding any new modes filing separately on this form. Lastly, if your agency owns capital assets that are used in another NTD reporter service, you will report the agency where they are used in the Separate Assets section of the B10 form. Again, if this does not apply to your agency, please leave this section blank. Next, we will cover the B30 Contractual Relationship form. The B30 form captures information about contractual relationships. These are relationships where transit service is provided to an agency or government unit from a public or private transportation provider based on a written contract. The buyer of service will be the transit agency that pays another entity to perform service. Please note, if the buyer of service only pays a portion of the cost to operate service, it should not be reported as a contract. The seller of service will be the entity that provides service on behalf of another agency. The seller may be a public or private entity. The NTD has specific criteria for service that may be reported as a contract. The criteria are as follows. A written agreement exists that, number 1, obligates the seller to provide the operations for a specific monetary consideration. Number 2, specifies a contractual relationship for a certain time period and service. Number 3, obligates the seller to provide to the buyer the operating statistics required by the NTD annual report. And number 4, the authorized representatives of both the buyer and seller sign the written agreement. Buyers must pay the full cost of service in order to report the service as a contract to the NTD. Also, the service must be branded under the transit agency buying the service. In order to add a B30 form to your report package, you will click on the Add Contractual Relationship button at the top of your report package summary dashboard. All B30s from previous report years will generate during your report year kickoff as part of your report package. Since report year 2018, there are 2 types of B30 forms, one for vanpool modes and one for all non-vanpool modes. Once you have selected Add Contractual Relationship, the first step is to select whether the contractual relationship is with another agency who reports to the NTD or is a private company. Then you will click Continue. If your B30 is with another NTD reporter, you must select the contracted agency from a list generated by the NTD database. You can also search for the provider in the search bar. At the top of the B30 form is the contract summary. The first selection to make is your contractual position. This indicates whether your agency is the buyer of service or seller of service. Once you've selected your position, you will report whether the contract was negotiated or competitively bid. This should refer to when the contract was awarded, even if the option years have been exercised. Then you will select the primary feature of the contract, or how does the buyer compensate the seller. There are two options. The buyer pays the seller a negotiated fixed rate per unit of service, or the buyer reimburses the seller's net operating expenses based on an approved budget. You will select one of these options from the drop-down menu. Next, you will indicate whether the service statistics will be reported in your NTD report or in another NTD report. If you are reporting the service data in your own NTD report, select the In This Report option. If another NTD reporting agency will be capturing the service data provided in the contract, select In Another Report. Then, you will indicate whether the seller keeps the fares or the seller returns the fares collected to the buyer. The last selection for the contract summary is to indicate any public assets provided to the seller by the buyer, if applicable. These may be vehicles, maintenance facilities, or other public assets. If you select Other, you will be required to provide a description of the public assets provided. The next section of the B30 form is where you will add each mode provided as part of the contract. These modes do not carry over from year to year and must be added to your B30 form each new report year. You may only add active modes from your P20 form or modes listed as filing separately on your B10 form. You will click the Add New Mode and Type of Service button at the bottom left of the form to add modes. Then you'll select the appropriate mode and type of service from the drop-down and click Edit on the right-hand column to open up the key financial and operating statistics fields. There are several parts of the key financial and operating statistics section. First, you will report the number of vehicles operated in maximum service, or VOMS. This should represent the highest number of vehicles operated at any given point during the year, excluding special events or atypical service days. Then you will indicate how many months the seller provided service during the report year. Next, you will report the amount of fare revenues generated by the service. You should report the total amount of fares collected, regardless of whether the buyer or seller retained the fares. Then you will report the total payment to the contractor in the direct payment line. This should be the total amount paid directly from the buyer to the seller without netting out any capital leasing or other expenses. Next, you will indicate the amount of capital leasing expenses for the contract. Capital leasing costs are expenses that the seller charges the buyer for use of its capital assets, such as vehicles or maintenance facilities. If the buyer provides all of the assets, this does not apply. If you are the buyer of service, you will record any costs your agency incurs for overseeing the contract under the Other Operating Expenses Incurred by the Buyer field. This should include general administration costs to oversee the contract and any other applicable expenses. Lastly, you will report any leases and rentals expenses in the Other Reconciling Item Expenses Incurred by the Buyer field. This will be for expenses such as vehicle rentals. The next form you will review is the A10 Stations and Maintenance Facilities form. On this form, you will begin by reporting data on your agency's passenger stations. You will report the number of ADA accessible and non-accessible stations, as well as the number of elevators and escalators in your stations. Passenger stations must be significant structures in separate rights-of-way in order to be reportable. Please note, bus stops or bus shelters do not count as passenger stations. Next, you will report a count of your agency's maintenance facilities used to support revenue service. This will include any owned or leased maintenance facilities. You will report the facilities by the ownership type, facility type, and capacity. If your agency uses one maintenance facility for multiple modes, you will need to prorate the facility based on the amount of vehicles it services. For example, if an agency operates a demand response mode and a bus mode that use the same maintenance facility, this facility would need to be prorated between the A10 forms for each mode. If the agency owns 20 vehicles total, 15 of which are used for demand response and 5 of which are used for bus, the demand response A10 form would reflect 0.75 of the facility, and the bus A10 form would reflect 0.25 of the facility. This is determined by taking the number of vehicles for each mode and dividing by the number of total vehicles for all modes. Now we will talk about the A15 Facilities Inventory form. On the Transit Asset Management Facilities Inventory, or A15 form, you will report all administrative and maintenance facilities for which you have capital replacement responsibility and greater than incidental use, as well as all passenger facilities that your agency uses in revenue service, regardless of capital replacement responsibility. A few common examples of facility types are administrative buildings, which are the offices that house executive management and supporting activities for transit operations, combined administrative and maintenance facilities, which are facilities that combine the functions of both an administrative and a maintenance facility, and finally, maintenance facilities. These are facilities where routine and heavy maintenance on vehicles is performed. When adding a new facility to the A15 form, you will need to complete all required fields, which we will review. To get started, click Add New. There will be 3 sections to fill out for each facility: facility information, condition assessment, and address. Clicking Add New will first bring you to the Update Facility Information section, where you will click on Add Facility. Next, you will fill out the name of the facility. You can name it whatever you'd like that makes it easily identifiable to you. Then you will fill out the primary mode that this facility serves. If the facility serves more than one mode, you should choose a primary mode that it predominantly serves, and in the next field, you can identify any other mode served as a secondary mode. Secondary modes should be added for any other modes that the facility serves, or can be left blank if it does not serve any other modes. The secondary mode field is not a drop-down menu, so you will need to start typing before options appear. Next, you can identify any private modes that share use of the facility. The options for these non-public transit modes are airport, private bus, private rail, and private water transit. An example of private bus would be Greyhound, or an example of private rail would be Amtrak. Here you will choose the facility type from the drop-down menu. You should select the facility type that fits your facility best. A list of facility type descriptions is available in the policy manual starting on page 97. If you have questions about which facility type you should select, please contact your analyst. You will then report the year that the facility was built or reconstructed, the square footage, number of parking spaces, percentage of your agency's capital responsibility, and any notes you deem necessary. Next, you should click Continue to go to the Condition Assessment section of the form. Here, you will report the condition assessment for the facility on a scale of 1 to 5, with 5 being excellent and 1 being poor. If you do not have a condition assessment for the facility, please select NA from the drop-down menu. If you would like guidance on how to complete a condition assessment, please refer to the TAM Facility Performance Measure Reporting Guidebook, which can be found on NTD's website. Once you've selected the condition assessment rating, you should select the estimated date on which you conducted this assessment. Lastly, you should click on the Update Address tab or click Continue to fill out the facility's address information. You may report either the street address of the facility or the latitude and longitude. Once all the information has been added, you can click Continue to add the facility to your A15 form. You can review or edit information for any of your facilities by clicking on the facility name from the main A15 landing summary page. Now we will review the A30 Revenue Vehicle Inventory form. Each year, you should review and update the A30 form by adding any new vehicles or retiring any vehicles that are no longer in service at your agency. The form will pre-populate all revenue vehicle fleets from the previous report year. If you need to add a new fleet, you will select the Add New Fleet button. First, you will report the basic information about the fleet. If there are multiple vehicles in a fleet, these vehicles should be identical across all specifications. You will select the vehicle type from a drop-down menu of options. Then you will report the number of total vehicles and active vehicles in the fleet. Active vehicles should include all vehicles that are available to provide revenue service, including spares. Next, you will select the ownership type. This will include options such as owned or leased, and whether the vehicles are owned or leased by a public agency or private entity. Then you will select the funding type. This should represent the largest funding source for the vehicle fleet. There are several options for funding type, including FTA grant programs, other federal funds, and non-federal funds. If you do not have capital responsibility for the fleet, you should check the No Capital Replacement Responsibility box. New for report year 2019, if vehicles in a fleet can operate without any human input, you should check the Automated or Autonomous Vehicles box. This selection will not apply to the majority of reporters. Once you have entered the basic information, you will report the vehicle information. This includes the fleet's model, length, seating and standing capacity, fuel type, manufacturer, and year manufactured. Some vehicles may have multiple manufacturers. Agencies must report the final manufacturer and model. For example, for a cutaway vehicle, you should report the cutaway body manufacturer and model, since that is the final manufacturer of the vehicle. You should not report the manufacturer and model of the vehicle's chassis. If you have questions about how to report these data points for your fleets, please contact your analyst for guidance. As a note, if your agency reports a year rebuilt for a vehicle fleet, you will also now be required to indicate the type of rebuild that was performed. In each vehicle fleet, you will see useful life benchmark as well as useful life remaining in the vehicle information section. Useful life benchmark is the expected life cycle or the acceptable period of use in service for an asset as determined by your agency or the default benchmark provided by FTA. Please note that this measure takes into account your unique operating environment, including your geographic location, the frequency of your service, and your climate. Because of this, useful life benchmark is not the same as useful life for FTA grant programs, which typically defines the minimum age at which equipment can be retired. Useful life benchmark will automatically populate a default value when you select the vehicle type. For example, the vehicle type for this fleet is selected as bus. The standard useful life benchmark for buses as defined by FTA is 14 years. Thus, a value of 14 will populate in this field. Agencies have the option to report a value that is different from the default. Useful life remaining will automatically populate once you report the year a fleet was manufactured. In this example, since the fleet was manufactured in 2014, it has been in service for 5 years as of 2019. If the useful life benchmark for buses is 14 years, then the fleet would have 9 useful life years remaining. Please note that useful life remaining is not an editable field. This value is calculated based on the year manufactured and the useful life benchmark fields. Lastly, you will report the mileage information. This includes miles this year, which should reflect all mileage incurred by the fleet during the fiscal year, and average lifetime miles, which is the average total mileage per active vehicle in the fleet. Average lifetime miles can be calculated for the current report year in 2 ways. If the prior year's average lifetime miles were accurate, you can divide the miles this year value by the number of active vehicles in your fleet and add that result to the previous year's average lifetime miles. Otherwise, you can simply take the average of all ending odometer readings for the active vehicles in a fleet if the odometers have worked properly for the entire lives of the vehicles. If you need to edit an existing fleet, you will first click on the link of the fleet's Revenue Vehicle Inventory, or RVI ID. This will open a drop-down where you will then be able to update any fields as necessary. A new feature was added in Report Year 2017, which is the ability to add an existing fleet onto your A30 form. For agencies that share fleets between modes, you will now be able to copy fleets from one A30 to another by selecting the Add Existing Fleet option. The system will populate all fleets that may be shared between modes. If a fleet is no longer in service and needs to be retired, you should not delete the fleet from the A30 form. What you should do is change your active vehicle's value to 0 and then select Yes for the Is this fleet retired question that will pop up in the bottom right-hand corner of your fleet details. If a fleet is out for repairs and will be coming back into service, you should still update active vehicles to 0, but you should select No to the Is this fleet retired question. Fleets should only be deleted from the A30 form if they were accidentally added to the report. If needed, you can delete a fleet by clicking on the red X next to the fleet entry. Next, we will cover the A35 Service Vehicle Inventory Form. The A35 form is where you report your agency's non-revenue vehicles that support your service. You should report all service vehicles for which your agency has capital responsibility. Service vehicles are roadworthy, self-propelled, or major pieces of construction equipment that support revenue operations, maintain revenue vehicles, or perform transit-oriented administrative activities. Similar to the A30 form, you can group service vehicle fleets by vehicles that are identical across all specifications. Service vehicles are grouped into 3 vehicle types: automobiles, trucks and other rubber tire vehicles, and steel wheel vehicles. This form is not specific to modes, so you will only be required to complete one A35 form. To add a new service fleet, first click Add New. Then click Add Service Fleet at the bottom left-hand side of the form. The first section of fleet information is the Service Fleet Information tab. You will report the fleet name and agency fleet ID. These can be names and IDs that make the fleet easily identifiable for your agency. Similar to facilities on the A15 form, you must select a primary mode that the fleet supports. You can also report secondary modes as applicable. Then, you will select the vehicle type for the fleet from the drop-down menu. Descriptions of these 3 vehicle types are available in the policy manual starting on page 119. Next, you will enter the number of total vehicles in the fleet. The useful life benchmark field will populate when you select the vehicle type. You may choose to enter your own figure in the useful life benchmark field. Now, report the year the fleet was manufactured and any notes as needed. Click Next section to go to the next page, where you will report your agency's capital responsibility percentage for the fleet. Lastly, enter the estimated cost for the vehicle fleet and the year dollars of estimated cost. For the estimated cost, you should report the full cost to replace the fleet, including soft costs such as financing charges. This value should be the most recent value the agency has, whether that is the original cost of the assets or the insured value. The year dollars of estimated costs figure means the year that your estimate is from. If you are using the original cost of the asset and it was purchased in 2012, your year dollars would be 2012. Next is the A90 Performance Measure Targets form. On the A90 form, you will report targets for your asset performance in the upcoming fiscal year. This form compares data from the current report year asset forms to the targets entered in the prior report year. This year, you are also required to submit a narrative report that outlines your agency's progress towards your performance targets. The narrative report is required for report year 2019 for all agencies with their own TAM plan and for group plan sponsors. This document will be attached at the bottom of the A90 form. The document should outline your agency's progress towards the targets you set for 2019 and any conditions during the year that affected your progress. There is no prescribed format for this narrative. If you have any questions, please contact your analyst who can provide more resources. These are the categories that you will see in the A90 form. The sections are broken down into equipment, which represents service vehicles, rolling stock, which represents revenue vehicles, facilities, which represents your passenger stations and other administrative or maintenance facilities, and infrastructure, which doesn't apply to reduced reporters as it pertains to rail. In the first section of the A90, you will report the target percentage of revenue vehicles that will have met or exceeded their useful life benchmark by 2020. The list of vehicle types will populate based on your active modes. If any vehicle type does not apply to your agency, you can check the NA box in the right-hand column and that row will become grayed out. In the equipment section, you will report the percentage of service vehicles that will have met or exceeded their useful life benchmark in 2020. Again, check NA for service vehicle types that your agency does not operate. In the facility section, you will report the target percentage of facilities that will rate below a 3 on the Transit Economics Requirements Model or TERM scale in 2020. Check the NA box if a facility type does not apply to your agency. At the bottom of the A90, you will upload your agency's narrative report. You can upload the narrative report in most file formats. Now we will cover the RR20 Reduced Reporting Form. This form will include financial, service, and safety data. There are several sections on the RR20 form, including fare revenues and directly generated funds, revenues accrued through a PT agreement, non-federal funds, federal government funds, service data, and safety data. The first section is where you will report financial data. First, you will report the total annual expenses by mode and type of service. This should include all funds expended towards your public transit service. You will separate expenses by funds expended on operations and funds expended on capital. Please note, capital leasing expenses should not be included in either of these totals if you have a B30 form. In that case, the total funds expended at the top of the form will not match the sum of funds expended by mode and type of service, which you enter here. Next, you will report fare revenues by mode and type of service. Fare revenues should include all income received directly from passengers, including cash or prepaid tickets, reduced or subsidized fares, donations made on board the vehicle, and any organization fares such as agreements arranged by colleges or universities. With the updated USOA in effect since Report Year 2018, agencies are required to report fare revenues in two categories: passenger paid fares and organization paid fares. Passenger paid fares consists of direct fares, including payments such as full adult fares or senior citizen fares. Organization paid fares includes fares earned from organizations for providing transit service, such as universities, reduced fare reimbursements, or other special contract transit fares. You will then report the total of other directly generated funds in the next section. Some examples of other directly generated funds are advertising revenues, fundraisers, park and ride revenues, or interest on investments. You must provide a detailed description of the funds reported in this section. Agencies should also include donations and insurance recoveries in this field. Insurance recoveries should include any insurance payouts, dividends, or rebates, and funds that may be netted out towards future bills. The next section on the form is for PT agreement revenues, or revenues accrued through a purchase transportation agreement. You should only report a value in this field if your purchase transportation agreement meets NTD criteria for a full cost contract. This field is for revenues accrued by the seller of transportation services. This will not include passenger fares generated by the service. You should only report a value in this field if you are the seller or operator of purchased transportation. If this field applies to your agency, you will indicate whether the revenues came from another NTD reporting agency or a non-NTD reporting agency. Next, you will report your non-federal funds. This includes local funds, state funds, and other funds. If you report funds under other, you will be required to provide a detailed description of the source of funding. The last portion of the financial data section is federal funds. You will first select the applicable federal funding sources on the left side of the form. Once you do so, fields will populate on the right side of the form for data entry. Once you've determined the appropriate sources, you will enter the data for each federal funding source. As a reminder, you will need to report funds expended on operations and funds expended on capital in separate columns. Please note, if you select an other option, such as other FTA funds, other USDOT funds, or other federal funds, you will be required to provide a description of the original source program. Some examples of these other sources may be FHWA funds or Medicaid funds. Next, you will report service data. You are required to report annual vehicle revenue miles, annual vehicle revenue hours, annual unlinked passenger trips, sponsored trips for demand response and demand taxi modes, and annual vehicles operated in maximum service. Vehicle revenue miles and hours should include the miles and hours when the vehicle is in revenue service and the miles and hours incurred during layover and recovery time. Revenue miles and hours should not include deadhead, operator training, school bus or charter services, or vehicle maintenance testing. Here you will see a table that illustrates what is revenue service, both miles and hours, for demand response. For example, when the vehicle departs the dispatching point to pick up a passenger, this is not considered revenue miles or hours. However, on the third row in the table, when the vehicle arrives at a pickup point and waits for the passenger, this would be considered vehicle revenue hours. This next table outlines examples of revenue service for a bus mode. When the bus is traveling on its route during scheduled revenue operation, this will be considered vehicle revenue hours and revenue miles, even if passengers do not board the vehicle. On the fourth row, there is an example of deadhead. Once the bus arrives at the end of the route and deadheads back to the storage lot to park, this is not considered revenue service. You can reference these tables for both demand response and bus in the policy manual starting on page 69. Unlinked passenger trips should represent the total number of boardings on your agency's vehicles while providing public transit. This should be the total boardings for the entire fiscal year that you are reporting on. The last section of the RR20 form is the safety data section. You will report any reportable events that meet one of the following criteria: an event that results in a fatality, an injury, $25,000 or more in damages, a collision that results in the towing of a transit vehicle or another vehicle involved, or an evacuation for life safety reasons. Fatalities should be reported if they occur within 30 days of the event, and injuries are reported when passengers are transported away from the scene for medical attention. Now we will cover common validation issues with service data. The first is reporting scheduled hours or available service hours instead of actual revenue hours. You should report actual vehicle revenue hours and not scheduled hours. A second common validation issue is reporting vehicle revenue miles based on an average route distance. Agencies should be tracking actual revenue miles, not calculating an estimate. A third common issue relates to deadhead. Agencies should not include deadhead in annual vehicle revenue miles or annual vehicle revenue hours. Deadhead includes the time and miles while leaving the garage to go to the first point of revenue service, returning to the garage from the last point of revenue service, or any time the driver does not have the duty to carry passengers. If you have questions about what to include in your service totals, please contact your analyst for further guidance.
Next, we will cover the FFA 10 Federal Funding Allocation Statistics Form. On this form, you will report the vehicle revenue miles, hours, ridership, and operating expenses broken down by each urbanized area or USOA that you serve. You will complete one FFA 10 form for each mode. The USOAs will populate based on your agency's B10 form. If you provide service within one USOA or one non-USOA, you will report all of your service to that area. If you operate in more than one area, you will report all of the data statistics for that route to the USOA or non-USOA that is primarily served, or you can allocate the data statistics proportionally to the USOAs and non-USOAs served. For further information on serve rules and allocating to different USOAs, please refer to the NTD Serve Rules in our policy manual. Here you will see an example of an FFA 10 form with one USOA or urbanized area. There is one column to enter all of the data. Here is an example of an FFA 10 form with two USOAs. There will be two columns to report your data, one for each urbanized area or non-urbanized area. You will see on the left side of the form, highlighted here in red, each data point that you will report: vehicle revenue hours, or VRH, unlinked passenger trips, or UPT, vehicle revenue miles, or VRM, and operating expenses, or OE. You will first select your USOA reporting method on the form. There are three options: actual data, actual vehicle revenue miles, or other. For actual data, this means that your agency tracks 100% of VRH, VRM, UPT, and OE between all urbanized areas that you serve. Actual vehicle revenue miles means your agency only tracks vehicle revenue miles operated in each urbanized area. The system will automatically allocate the remaining data points, such as VRH, UPT, and OE, based on the vehicle revenue mile data that you report. The last option, other, means your agency used another methodology to track data between USOAs, and you must provide a description of this method. If you select actual data, you will need to manually enter in the values for VRH, UPT, VRM, and OE into both USOA columns. If you select actual vehicle revenue miles, you may only report VRM to each USOA. The other data points will be automatically allocated. You will report the amount of VRM in each USOA column. If you select Other, allocate your data accordingly and then provide a description of your methodology. The last form in the report package is the D10 CEO certification form. This form should be completed by your agency's CEO. You will first need to confirm the accuracy of your NTD report. Next, you will confirm that you reported data in accordance with NTD policy and the Uniform System of Accounts. Now you will review the criteria listed in options A through G and ensure that the data meets these requirements. You will select yes or no for each mode operated. Next is the section of the D10 that pertains to the ISFD or Independent Auditor Statement for financial data. You will first indicate whether or not you have an existing ISFD within the last 10 years. If you completed one last year or have one from the last 10 years, you will select yes to the first question and proceed to the next section. Please note that this was a requirement in report year 2018. If you received a waiver in the 2018 report year, your ISFD is required for the 2019 report year. If you do not have an existing ISFD, you will indicate whether or not your agency has a waiver for this audit for the current report year. And then if not, the last question will appear and you can upload your newly completed ISFD document directly into the system. You will need to complete the date it was completed and who it was completed by. If you have not completed your audit, please select no to the first 3 questions on this screen and then enter the anticipated completion date in the explanation box. This allows you to explain why the audit has not been completed yet and when your agency expects to have it completed. Lastly, you will review the data collection method for unlinked passenger trips. There are several methods, the most common being a 100% count of unlinked passenger trips. There are other options such as alternative sampling method, the NTD sampling method, APC data, or none of the options listed, for which you would provide a description for. Please note that most reduced reporters do not sample for unlinked passenger trips. If you are unsure of what method to select, consult with your analyst for guidance. Once you have determined the method that your agency uses, you will select the choice from the drop-down menu. If using any automatic passenger counter or APC data for UPT for any of your modes, please check the Used APC Data checkbox next to the appropriate modes, which is a new field for this year. This is the last section of the D10 CEO certification form. Now we will cover how to submit your agency's NTD report once the forms are completed. Please note that completing the forms in the report package or completing the D10 CEO certification form does not submit your report to your analyst. Once the report is finalized, navigate to the report package summary page and select related actions. Please note that only the CEO or CEO delegate may submit the original submission, which is the first submission of the report. The NTD contact may submit all subsequent reports during the revision process. Once related actions is open, select Submit Annual Report Package. If the report is complete and there are no outstanding issues with the data, you will be able to confirm the report package submission by clicking Continue. Once the report is submitted, you will receive a notification that says Action completed successfully. You can confirm that the report package has been submitted if the package is listed as in review rather than in working data on the report package summary page. Lastly, we will cover the validation process and what happens with your report after you submit the original submission. Your assigned NTD analyst will validate your completed report for any deviations from the reporting requirements, missing data, or data irregularities. This includes whether the data fluctuated significantly from the prior report year, or if any forms do not contain all of the necessary information, or if any data elements were reported to the incorrect field. Prior to submitting their report, agencies may take advantage of their resources to reduce the time dedicated to report validation. This includes contacting your analyst prior to submission so that they may review your data in advance. You may also refer to report checklists included in your welcome packet, which contain common validation errors and other items to look out for before submitting. It is typical for a report to go through a few revision cycles before being closed out. Your analyst will almost always return your original submission for data revisions or clarifications. Once the report is ready to be sent to FDA for approval, it will either be sent as a clean closeout, which means there were no issues with the report, or it will be a closeout with issues, which means there were some outstanding issues that could not be resolved prior to the report closeout. The issues are cited in your agency's closeout letter, and your agency will be expected to resolve them by the following report year. Looking ahead to the 2019 report year, you can expect a welcome email from your analyst as the due date approaches. This email will include a packet containing helpful tips as well as the reporter checklist for your agency. Your analyst will also provide guidance in completing, submitting, and validating the report until it is closed out. Please do not hesitate to reach out to your analyst with any questions or concerns you may have. Thank you very much for tuning in. Again, here's the contact information for the help desk line for NTD. We're open Monday through Friday from 8 a.m. to 7 p.m. Eastern Time. And then now we're going to open it up for questions and review the questions that came in during the presentation.
Okay, great. I guess we'll go to the Q&A box. So there's 3 open questions. I guess I'll read them. And if it was answered, just stop me and correct me.
Okay.
So Sharon asks, if a person buys a punch card type of pass for $10, a system, especially a small system, and $5 is used in one period, the system might only know when the pass was purchased and not when used. How would the system report this?
Sure, so that's a great question. We typically would let an agency know that they should look into tracking the punch cards or fares as they're used versus when they're purchased. But as you know, each agency is unique. We'd recommend in that case to reach out to your analyst so that you can discuss that on a more detailed level with your analyst so they have some insight as to how that's currently being reported in your report and how you can work towards reporting that when the fares are actually used versus when they're purchased. So Sharon, if you need help finding out who your analyst is, you can also just send that in the chat box and we can help you. If you already know who they are, feel free to send them an email or give them a call with that question and they'll be able to assist you further.
Great. The next question. I'm sorry, I'm probably going to say your name wrong. So you know what? I'm just not going to say it. I'll just read the next question. Wait, maybe it's Awambui? Anyway, if offering more than one mode, say MB-NDR, which mode determines the agency's service area since mode would yield different results? Do I take the large number, typically from DR mode? Thanks.
Sure, so that's also a really good question. So you would use the combined service area, but not double count where they overlap. So for example, if you operate bus service within the city, then you operate demand response service in the entire county, and that it includes the city, you would include the larger amount and the combined. So if you provide it in overlapping areas, you won't double count those areas, but you would just use the combined service area for all of your modes. So if you have specific questions about that, again, I'd recommend reaching out to your analyst and they can help you figure out how to determine your service area.
Awesome. Okay. And one more from the same participant. If an agency provides PT and their contractor leases an operational base for administration and vehicle maintenance activities, should the agency report this under TAM A15 as a facility even if they don't have capital responsibility?
Sure. So the agency would not report this facility since it's an administrative or maintenance facility that they do not have capital responsibility for. So any admin or maintenance facilities are only reportable if your agency has capital responsibility. So in this case, since the contractor is the one leasing it, the reporting agency doesn't have capital responsibility and we would not expect to see that on the form.
Great. Oh, you're welcome. It also looks, there's no open questions right now. If anyone listening has a question, please type it in the Q&A box. But it does look like there was one typed in the chat box, and I don't know if everyone can see it because I think it was just sent to us panelists. So it's from A. Francisco, and it says, can you please expand more on the other funds received? Like if the city receives transportation funds from sales tax, does it need to be reported? Also, if the city spends money on bus shelters and debt service payment to pay for a transit plaza, in parens, both currently under construction, do they need to be included on the report? The city uses transportation funds received from the state.
Sure, so you would want to include all funds that you're using to fund your transit service. So if you have transportation funds from a sales tax that you then expend on your transit service, we would expect to see those in the report. Also, in terms of the capital expenses mentioned in the second part of the question, we would also expect to see those on the report. For transportation funds from a sales tax, it would the source of funds would depend on where that tax is coming from, whether that's a local tax or a state tax, and you would report that under the appropriate funding source on the RR20 form. Again, if there's more details to that, feel free to reach out to your analyst with the details on where that sales tax is coming from, or those transportation funds, and we can help you determine what the best field is to report those. For the capital funds, like I said, if you're receiving funds from the state, you would want to include those if those are going towards your transit service that's captured in your report, and that includes both operating expenses and capital expenses. So if you're using state funds for that, then you would include that under the state funds section, funds expended on capital. So I hope that answers your question, but if you do have specifics or need further explanation, I'd recommend just calling your analyst or typing that up in an email for them, and they can help you walk you through where to put that on the form.
Thank you. I guess I'll just pause briefly to see if there are any more questions in the Q&A box, and I scrolled through the chat. It looks like we got everything that was in there. So just wait another few minutes. While we're wrapping up, I would like to take this moment to just remind the participants that you will be receiving an invitation to fill out an evaluation survey for this webinar. NTI would really appreciate your feedback. So if you could just take a few minutes and complete that, that would be great. Doesn't look like anyone else is typing. Again, you have the contact information in the handout. And I would like to thank Melissa and Darlin for your great presentation. I know it was a long one. Thank you for bearing with us, everyone. And a lot of information to digest. I guess if nobody else has anything to add, have a good Tuesday afternoon.
Thanks, everyone.
Bye.